right. Well, for me, this is the most exciting part of the day. I don't know how for you guys. We have our investor panel here. We have Vincent Jacobs from Kima Ventures, Donatas Karas from Practica Capital. I'm sorry, I'm gonna just check. Jonathan Becker from eVentures, Daniel Blomqvist, from Random Capital, Roy Gunter from Mobility Ventures, and Tal Tochner from Tel Aviv Capital. Yes, I got that correctly? Yes, round of applause for our investors who are going to share their advice and experience. So let's get to know our audience, which is in a big hall, so we're a bit spread out. There's some people here. Startuppers? Startuppers, raise your hands, don't be lazy, just so we could see them. All right, bunch of you who want to be a startup person, about to start a startupper. Again, few, very good. I guess startup employees, not founders, startup employees. Yeah, they're not interested in investors. Who else could be here? Developers, designers. Who else is? Government officials? We have few. Oh, lawyers. We have a few. All right. So we have a very diverse group, and we're gonna kick it off by a very general question, where you have all the bragging rights about your fund and what you have been up to lately. So maybe we can start with you, Tal, quickly, and we have some microphones here.
Hi, everyone. I'm Tal from Tel Aviv Capital. I'm the VP and Head of International Business Development and Deal Flow. We are not a traditional VC. We do invest in seed stage companies, but the major thing of the activities of what we do is actually forming relationships with investment entities around the world and helping them find the interesting and most strategic investments for them. So we work mainly with Israeli startups, but we're now going outside of Israel and looking for new, interesting companies that we can collaborate and connect them to some of our partners abroad.
All right. Roy, if you want to continue.
I'm Roy Gunter, and I'm a partner in Mobility Ventures. We were started in Dallas, Texas in 2004. And when we started, I guess a smartphone was something I could send a text message. But we started investing in mobile in those days. And if you can offload from Wi-Fi to broadband, those patterns were part of our investments. If you can get high-speed internet in the city, those were part of our investments. So we are focused on the infrastructure that makes the mobile world possible. There are around 20 people in our fund, and we're scattered from Beijing to London to Sydney to Munich. And our focus, by the name, is in mobility, because we think that that's the future. And if you're thinking, what is mobility? It's more than the screen. If you're thinking smart cars, that's mobility. If you're thinking Uber, clearly that's mobility. But we also think that if you're thinking AI, that's also mobility. So that's our focus.
All right, I'm Daniel Blomqvist from Random. We're an early stage venture fund based in Stockholm and in Silicon Valley. So we divided our team across Europe and US because most of our portfolio companies are growing towards the US at some point. So that's why we have a team also part of our fund over there. We just launched our fourth fund, $220 million. So I think in aggregate we have about $600 under management, $600 million. Invest in early stage, so Series C and Series A primarily. Have been first investors in companies like Spotify, iSettle, Ticktail, Vivino. So a combination of consumer-facing services and B2B, broadly speaking, sort of SaaS marketplaces. So pretty broad in terms of what we invest in. I think the focus we have is to try and help founders build, really, really big companies, primarily out of Europe, even if we have investments also in the US. But I would say geographically, we've been mostly investing in the Northern Europe area. What else can I add? I think we come back to some more concrete sort of latest investments and takes on stuff. So hand it over to you, Jonathan.
Yeah, hello. My name is Jonathan Becker. I'm with eVentures, and we're actually an early-stage venture capital fund, and we're also spread all across the world because we fundamentally believe, great companies can be created anywhere. So that's why we set up shop with small teams in the US, in Europe, where we're based in Germany, and then we're also in Brazil, in Japan, and in China. And in all these regions, we essentially do the same thing. We invest in, promising early-stage companies. Early stage meaning usually the Series A stage, and then anything $1 million and above, up to 15 million investment. And so while we're, pretty small in the respective regions, as a global organization, we're actually pretty large. So we manage over $1 billion. And we invest pretty broadly. It has to be mainly digital business, but we do both B2B and B2C. So a lot of marketplaces like Farfetch, for example, or also deep technology B2B companies like NGINX or App Annie for mobile app analytics. So there's over 100 portfolio companies that we invested in.
Hello, probably I'm a local guy here and happy to be here. So I'm Donatos from Praxica Capital, and we are local fund, small fund, just 20 million, but we are really active here, not that active as Schema for sure. So we do investments in Lithuania, and we've been doing that for 5 years already. We have 40 companies in our portfolio, so it's almost an investment a month. And we've been quite busy. So we are behind a couple of, let's call it success stories in Lithuania. And we are generalists, so we don't have very strict strict sector or size of a company, and we tend to do early stage, even pre-revenue, but we can go up to A round. So our usual ticket, we start with 150, 200,000 euros as investment, and we continue up to 1.5, 2 million euros in one company. So, thank you.
Okay, hello, I'm Vincent Jacobs from Kima Ventures. We are a very active seed investor based in Paris and in London. We invest at seed stage, so usually about $150,000 per company, and we do a lot of investments. So we do 2 or 3 investments a week when we can, so about 100 to 150 investments a year, and really anything, anywhere in the world. Doing it since about 2010, made about 380 investments now, probably half consumer, half B2B, all over the world, including one here in Eddie's company.
Yay. Thank you. All right. This conference is all about inspiring people. And can you share some trends, technologies, things that are specifically inspiring you to maybe not only invest, but actually also dig into that technology and help it develop? In Lithuania, for me, it looks like everyone is about VR right now. We had VR hackathons. We have VR, something gaming going on in shopping malls. Everyone is giving VR sets as a gifts. That's a trend in Vilnius. What are you guys excited about? Maybe Tal, you can start again.
Yeah, there are a lot of very interesting trends, VR, AR, specific space as well. I'm specifically very interested in fintech and impact investing. Banking the unbanked, for instance, is something that I'm personally very passionate about, and we at Tel Aviv Capital have been working with quite a few companies in that field.
Yeah, can you continue?
I think from our perspective, AR and VR are really cool. Obviously, it's exciting tech. We question how much of it is ready for, if you like, mass adoption. So our focus right now is, or my focus personally, is on customer service and how you can transform customer service and the customer engagement with brands, particularly in the mobility space. So we see a lot of opportunity for, if you like, particularly large financial institutions and utilities to transform their experience with their customers through customer service.
You have any maybe more specific examples? Because this customer service doesn't sound like a very sexy topic. It would be interesting to learn more.
No, it's not sexy, but there are some simple examples, I guess. If you think of Vodafone, they're the largest mobile operator in the world, but when they send you your bill, it comes as a PDF. That's really cool, right? But what's the value of that? If you think about the same company, they know more about you than you know about yourself. But when you phone, the only interaction you have is to give them your date of birth and your password to get access. And then somebody on the other line manages all the information, normally incorrectly. You're online for an hour to get something done. We think that that model is wrong. And we think that, for example, real-time billing can allow you to engage with your brand in a different way and also to manage your experience in a different way. So if you're ringing Vodafone and the person on the other side has all the information, that just seems it's the wrong way around. You should have the information. You should be able to manage your experience with that brand using your mobile device, get the service you want and the experience you want. So those are the kind of examples that we're investing in right now. And we think that it's not sexy, but we also think Uber wasn't sexy. It's a taxi company.
True. Daniel?
I think from a firm perspective, there are of course topics and sectors that we look at more closely, including some you mentioned. And I think where we have invested the last year have been in VR, which I think in an area which we're sort of a little bit overestimating on the short term, to your point. I don't think it's mass market ready yet. But I think if anything, maybe we underestimate it in the longer term. I think it can have a big impact. But it will take time, right? So if you're an early investor in these companies, you have to make sure that these companies can be around when the mass market timing might happen, and that's not going to be this year for sure. Fintech, we're based in Stockholm, is a big, together with London, one of the big centers for a lot of that stuff. So we can lay out a lot of these different sectors, and as an investor, you're looking for big markets that can be disrupted. So as a pretty generic topic, I think what gets us inspiring though is maybe more so than the specific sector is the teams, the entrepreneurs. I mean, that's what really gets us inspired. And as an early stage investor, we've invested across so many different industries: Spotify, music. Then you have payments. You have. I mean, it's hard for us to depict where we're going to find these entrepreneurs that's going to build the next massive company. So we try to have a pretty open mind to where these teams might be focusing on. So pretty boring answer. Sorry about that.
Yeah, I mean, I think, generally what investors look for is, huge platform shifts. So anything that could mean, it fundamentally changes how, consumers behave and therefore also where business completely changed in the way they make business. And I mean, the internet and the smartphones are the most prominent examples. And I think, investors are, really excited right now about virtual reality because it could, potentially mean, complete platform shift. It could, potentially completely disrupt existing devices like the smartphone and the internet and how we interact with the internet. So that's quite exciting for us. And we still actually fundamentally believe in in mobile and mobile first products. We think it's just the beginning of the shift towards mobile. And what we're especially excited here in Europe is that you can really create mobile products, and you have the same distribution power as, let's say, US American companies because of the app stores. You have the same capability to handle billing, and so you're able to create really big companies, and it's not that necessary where you're based, and that's what so exciting for us in Europe. A couple examples. So in virtual reality, we just did an investment in a company called Splash. So it's a mobile app where you can create 360 videos, although it's not a 360 camera. And you can then share it on Facebook. I recommend to all of you to check it out and download it. And then another company that we're excited about is also a mobile company. It's called Natural Cycles. And it's a company that actually helps you prevent getting pregnancy without actually... Yeah, no, and in a completely natural way, right? So you just measure your temperature at a set point of the day. And then, it's as safe as the pill, and, it's an all-natural way to, do contraception.
It's amazing companies you have. That's, it's almost scary. Okay, so for us being a local investor, it's or regional, it's to follow these big trends or to focus on these big trends is sometimes not possible or not even worth to do that. So as Daniel said, we are after teams, after entrepreneurs, and we always open for any good opportunity and any good company. But if to pick a couple, what I really like and what I really going into is of course fintech, but that's boring, not sexy at all. And Eddie, if you ask sexy, so space, of course, is another thing what I really into right now, and it's not especially hardware or satellites or something, but everything what comes back from space, all the data, all information, all the things how we can do that. And I believe that the price of getting the hardware up to space is dramatically going down right now, right? So opportunities are unbelievable. It's hard to imagine what we can do and how we can do it and what problems it's going to bring, what possibilities it's going to bring. So I really big believer in these things, and SpaceX is amazing. Jeff Bezos is doing amazing stuff also, but there are so many other companies which are doing unbelievable stuff, right? Even we have an example yesterday in Login. The guys are putting the rover on the moon, right? That's could it be possible 10 years ago? No way, no way. So I believe the big change, the big shift, the big opportunity is going to be there. So, and it's very kind of brave to say that we are concentrating on this, being in Lithuania, but yes, we have opportunities, we have people, we have companies in the field, and I'm very happy to be kind of in active role in this change.
If I remember correctly, Nanoavionics is exactly one of those companies, right?
Yeah, of course. So that's why I'm happy.
All right. Vincent?
Yeah. So if we talk about platform shifts, I think as a seed investor, we have to look at companies before those shifts happen. We can't wait to see who's going to win, where the platform is going to go. So we have to just find founders that we trust and have a belief in this market. Often it doesn't play out, but sometimes it does. So in that sense, suddenly for the last 2 months, I've seen 20 companies doing chatbots who are betting on chat being the next platform. And I don't necessarily agree with them, but if it pans out, then obviously these companies will do very well. I think in the last month, we've spoken to about 5 companies doing just 360 video, who are betting on all these consumer cameras coming out in the next couple of months. Facebook's moving in, YouTube's moving in, so they're all taking a bet on that. And will it play out? I don't know. So we just have to bet on founders who have conviction and will be able to get there before the market shifts. But kind of more in general, what I'm looking at, I'm based in London, so fintech is obviously the big one, mainly as kind of a consequence of the regulatory system there. So anything that's removing the burdens, anything that's removing just transaction fees is what's happening. You've had the big banks charging a lot, then the first generation of fintech coming in, robo-advisors, but still charging quite a lot for what they're doing, and then the next generation coming in, undercutting that wave of startups. So I think, we're seeing a lot of interesting things there.
Cool. Thanks a lot, guys. Well, besides all the exciting stuff, we have to look at what's going on in the market. Everyone is talking about death of unicorns, slump in the United States in investment. Is that already affecting your particular countries, regions? Are you getting prepared for that? So just general take, and maybe if you can give also the startuppers who are going to be maybe fundraising, should they take that into account, maybe raise bigger amounts? Well, you know it better. Since we've been doing this, starting with you, Tal, maybe you can go ahead again.
So in Israel, people are definitely discussing exactly what you just said, although we haven't been hit with that shift yet. We always experience it about a year after everyone else does. But we are preparing. A lot of the funds what we've seen since the beginning of 2016 is that a lot of the funds haven't been starting new investments, but have been maintaining their current investments. Another thing and what I can say to young entrepreneurs is that if you're able to raise money, then raise money and do that and be as lean as possible.
Fair enough. Thank you. Roy?
I think two points. One is we see that in mobility there is a need for, as I said before, enabling technologies to make the world of mobility much more usable. And so because of that, we tend to look at things like AR, VR as enabling technologies. So we also, having said that, it means we need to look long term. So some of these enabling technologies come together to create products that none of us in this room have thought about, none of us on this stage have thought about. And an entrepreneur will walk through the door and offer that. And we can take advantage of it. An example of this is a recent investment we made in Finland. And this investment is looking at how you navigate within buildings, whether it's on an emergency basis or whether it's on a shopping basis. And they've looked at the idea of navigating within building using beacons and so forth, and they've said that's the wrong way to go. How they're going to do it, how they're planning to do it, is to use the magnetic disturbance of the building and use the magnetic field to navigate. What that means is you can navigate within a building without any infrastructure. So you can go through that building, you can map the building, and there's not a need for infrastructure. It's called Indoor Atlas. And we've met a company in Israel who's approaching the same problem from a different angle. And so we're looking at that. So the investments we make are really long-term. They're really deep tech-based in most cases, not all cases. And so these fluctuations in the marketplace, we monitor them, we react to them, but we also try to make sure they do not influence too much our decisions, because our decisions are much longer term.
Thank you.
I mean, I think the current state of market is a little bit in flux, and I think it's also a little bit different on a regional basis. So clearly, U.S. is the ones reacting quicker to the pressure from the IPO market that hits the later stage growth companies, so the unicorns that you referred to. Now, it used to be, and there's still a bunch of these created. You can read about big investments at high valuations, but investors are definitely taking notice, and that has actually been happening for the last 9-12 months. Investors are preparing their companies for what's going to happen. Winter's coming. That was all we heard from summer last year, right? And now winter's here. I mean, it doesn't happen that quickly. People are reading the signals beforehand. I think in Europe we haven't seen the full effect yet. There was a bunch of new fresh capital in a number of funds last year. That has to go somewhere. So I don't think we're seeing the impact yet, but I think we will to some extent. It's hard to be isolated. I mean, many of our companies are international. They're looking at raising capital in the US, and the bar is higher, and valuations have been, if not completely reset, at least for a lot of companies, it's been more challenging, and that will have an impact. So investors are, as you say, they're looking at portfolio companies. They're looking, okay, we need to spend more time here. We're maybe not as aggressive looking for new investments. The fear of missing out has been very, very, very clearly in the market. People have been so afraid of missing that big company. I think that's slowing down for sure. So we'll see a little bit where it goes. I think, though, to your point, we're investors. We know that a lot of great companies will be created in the downturns as well as in the up markets. And you just have to continue to find them back the right entrepreneurs and teams, no matter what the market conditions are. But of course, it has an impact eventually down the sort of the financing rounds. So yeah, if you're in a position to, but that's maybe a bit hard advice to raise more money. Yeah, but the market is contracting. It might be harder, right? But if you're in a position, it's probably a wise thing to give yourself a bit more runway, because I do think it's going to be needed to hit sort of higher goals than maybe 2 years ago.
All right, thank you.
I mean, we're definitely seeing it in the US and especially in China. And I think it's quite a unique time, because to some extent, I think, for a lot of companies right now, it's easier to raise money in Europe than it is in the US compared to the traction they have. And it's actually a situation that we've never seen before. Usually it used to be always, a lot harder to raise in Europe, but I guess it's because a lot of funds, at least speaking for Germany, set up shop and are really looking to invest. But I think, it can also be good in a way for founders that, the really good companies and the really good entrepreneurs, they will always be able to raise money. And, we had a period where, essentially, growth at all costs was the mantra. So you have to grow, and the cost is not a factor. And I think what we're seeing now is that the companies that grew sustainably, that have good unit economics, they will survive this downturn, and they will feel less competition by competitors that can just raise unlimited amounts of money.
Okay, so we don't feel that. and that's very natural, probably, right? And probably opposite, because 2015 was the record year for Nordics and London for new funds and new money coming into the market, right? So we never seen that big funds or so many new funds coming across, right? And especially in our region, Karma closed. Tremendous fund, some other new funds are coming across. So I believe, we will be hit by this at some point of time, but probably not this year and not even next year, right? But of course, for the companies which are already out of the region, out of the scope, they're going to feel it together with all the rest of the world. So it's understandable. And whatever we do new investments now, we are fully aware of the issue and fully aware that the companies, even they're going to be successful, even they're going to have nice traction, and even everything going to be smooth and nice, they need to have a bit more revenue, or have to be a bit more revenue concentrated, and to start think about the business model, about making money a bit faster than it used to be 2 years, 3 years ago. So this is the things what we're thinking about. This is what we try to implement into the budgets, into the plans, and probably that's what we can do at the moment. And hope that all the money which are in Europe right now in Nordics, they will not sleep. They will still going to be put to work, and we're going to use that, use this momentum for next 2-3 years, and we'll see how it goes further.
Yeah, I think we've seen angel money dry up since the end of last year. Investors who had come in November or December and said, okay, we want to invest in this company, when they were then called to put the money in January or February, they suddenly stopped replying to emails. So that's happened quite a lot because, well, mainly in the US. I think the UK isn't affected for tax reasons because there's huge tax benefits. But in the US in particular, that's happened. Public markets have gone down. They haven't seen liquidity from their startup investments. But that can be, well, compensated for. I think the real dangerous scenario now is the companies that we've seen that raised large seed rounds in frothy conditions on high valuations and then haven't been able to hit the metrics for the next round. So they're in this no man's land where they can't raise an A, but they've raised too much money on too high a valuation to really make sense to raise more angel money or seed money. So they're in trouble now. So they have to do big down rounds or just shut down the company. I'm seeing not much willingness from past investors to back those companies again. And I'm not seeing, well, nearly any willingness from new seed funds to come in a bridge round.
Probably we're going to have many down rounds during the next couple of years.
But actually, maybe it's not the right kind of perspective here in Lithuania for us to really focus so much on the United States. It looks to me sometimes that it's actually a chance for us in Europe in general and in Lithuania specifically, because we never had a valuation bubble. We never had the angel money bubble at least in our part of Europe. How about, is it possible that it's a chance for Europe to kind of take part some of a startup spotlight from the United States and create some bigger companies here? Anyone?
I think so. I mean, I don't think this is maybe the single most important component because even the growth capital in the US have been beneficial for European companies that have reached a certain state. But to your point, Jonathan, I mean, if you're starting a company and all of a sudden, instead of having 50 super well-funded competitors, you have fewer. That's to your advantage too, right?
Yeah.
So it depends a little bit, of course, and if you're one of these companies that really can break through, capital will be available to you, right? But it has been for a couple of years a possibility for companies that were maybe not not growing with the right fundamentals. They were also able to grow to raise a lot of capital, and in those stages, of course, you could be a little bit unfair if you were in the wrong ecosystem where you couldn't raise the same type of capital. So we saw good companies who were looking at us and said, oh, that competitor raised this much and we're much better than them. And part of that is sort of you have to deserve the right to gain that capital, but also if there is a lot of capital available, maybe more than there should be, that tends to spread into the ecosystem, and it's not necessarily for the benefit of the longer-term sustainable company creation. So I think it's been, especially in the US, absolutely too easy to raise money for companies who maybe shouldn't be able to. And if that stops, it would be better for the ones that are building sort of proper companies, more innovative, with healthier fundamentals at the end of it.
But I think what's also great for Europe is in a way that because of these really high valuations in the US, a lot of the US funds started to look at Europe and started to invest in Europe. Because I think, up until 3-4 years ago, a lot of the Silicon Valley style VCs, they said, I want to reach my company within 1 hour drive with my Tesla. Everything else is like no man's land and I'm not going to invest. And, all of a sudden they start to fly to Europe and look at companies because they think, okay, they're great companies with great substance, but the valuations are, half of that what I pay in the US. So I think that's definitely a chance for Europe.
You previously mentioned China, so that's also that you're seeing a slump as e-ventures in China, because that's interesting, thinking that if a stock market is doing bad, people would be taking money out and maybe investing in other things, among them startups, no? Like, wouldn't...
I mean, I think, what we've seen in China in terms of valuation, I mean, San Francisco is humble if you compare that to China. I mean, we've really seen... really excessive valuations in China. At the same time, it's a massive market. Every time we look at a company in China, we look at the numbers. The European companies look like a joke because it's such a large domestic market. I think in China there was a slump in valuations, but we still see a lot of very, very large funding rounds. I mean, it's not like it's completely over.
And I think what you're referring to is exactly what we did see in the US. So public markets, it was tough to find return on investments. Super low interest rates. The stock market was not collapsing, right? But it wasn't providing the easy 5% per year per annum either. So what happened? A lot of the hedge fund money went into venture. But the problem is, sometimes that money needs to get out. And if you have a non-performing stock, IPO market, for example, the money's not getting out. So then people go, oh, okay, so Q1 in 16 was the first year without a single tech IPO in the US for several years. And investors take notice, I was investing in the pre-IPO and the IPO didn't happen. So they are correlated. I mean, you cannot have a private market working independently of the public market. They are related at some point, right? And I think we're seeing that alignment getting more real than it has been, say, 2 years ago.
To add to that, I think there's been a period over the last few years where innovation in itself has almost become an industry. And when you become an industry, you suffer from these cyclical turns. And so one of the trends that's been happening in the marketplace for quite some time, and if you're an experienced investor, you'll see it, is taking longer for IPOs to happen. In some cases, does it even really need to happen? And it's gone from around 3-4 years to around 7-8 years. And so some investors who came in when this investment boom was happening are now looking around trying to liquidate or trying to find answers to certain questions within their if you like, investment needs. And so there is a pullback in some areas because of this. But again, the opportunity is that if you can get some of the, if you like, I don't want to call it froth, but if you can get some of the unnecessary investment out of the marketplace, then the companies that are left have a better chance of being successful because there's less competition, there's less need to react in certain ways to competitors who are in the marketplace and are sucking marketing money and so forth out of your balance sheet.
All right. So also, because of these changing conditions, what should startups take into account? What's the market standard right now? Maybe in some terms that used to be different in the past. Maybe you can reflect on that. And also, what about the trends of crowdsourcing and platforms like AngelList, syndicates? Do you feel any, maybe even competition from those kind of trends? Are they affecting any of the decisions or term sheets? Dal, you want to start with? All right. Anyone?
I mean, at least to comment on AngelList and crowdfunding, I mean, I think I think 2 years ago, there was really, venture capital funds are dead. They're disrupted by AngelList. There's no, right to exist anymore. I think that didn't happen so quickly. Obviously we're looking at these platforms, and you always sometimes wake up and ask yourself, are you going to be meaningful or necessary in a couple of years? Absolutely, but I think in this market where the bar was very low to get funding, it was also challenging for crowdfunding platforms because capital was so widely available. So there wasn't really a need to go to crowdfunding platforms. Product crowdfunding like Kickstarter. That really took off, and I think it's also it's there to stay. I think also in the downturn now, crowdfunding is definitely going to become more relevant, and I'm curious to see what the new AngelList fund, the 400 million fund, is actually going to do, and how they're going to do it.
I think that from our perspective, we invest cash, but we also every person in Mobility Ventures has been an operating executive at some stage in a startup and also in industry. So when we invest, we go in with expertise as well as cash, and we're pretty hands-on. So we see these platforms as complementary. We do not see them as competitive, because when we walk into any firm that's raised money that way, we can show how we can add value to help them grow. And recently, a few years ago, Stanford and Berkeley did a research on startups in the Valley. And we all know that 9 out of 10 startups fail. But what they also found was 76% of the reasons these firms failed was because of execution, making decisions, trying to grow these businesses. And so if that's true, there's an opportunity for people like us who have the experience to help companies. So if you add value beyond cash, I think that these other funding platforms are actually complementary.
Vincent, maybe you can add also, I'm sure, as being from Kimo, the most active angel investor in the world, maybe you had a chance previously to work with companies that raised from syndicates or...
Yeah. I think we have to make a distinction between rewards crowdfunding, as in Kickstarter, where people get the product or they get a T-shirt or something else, and then equity crowdfunding. Yeah. I think both have their use cases. Both aren't quite useful in every case. I think rewards crowdfunding is great for hardware products, great, but more so to prove the market than to actually raise money. So it gives you money, but often they have to go then raise venture capital after doing a successful campaign. So it's more about proving the market, showing, okay, 1 million people want this product, and then they can raise VC off of that. I think equity crowdfunding, I think, is a great concept. I think in 5-10 years, it'll be much more widespread, kind of the mini IPO concept. I think today, for an investor, it's still largely a negative signal. In the sense that often when I see a company on an equity crowdfunding platform, it's a company that I know has gone to every venture fund and has been turned down. So that's not necessarily good. So I think it makes sense when there's also a story in terms of we want our customers to invest in our company. So in the UK, there's been a few, like Brewdog, which is a beer company. So they explicitly said, we're doing this because we want our beer fans to invest in the company. I think that makes a lot of sense. But often it's kind of the last resort for companies that couldn't raise venture otherwise. And then syndicates, my opinion is similar. Like, it started off very well in the US, the concept of getting an angel investor who doesn't necessarily have much money themselves to have other backing and unique access to a deal. But what it's led to is more of these kind of semi-professional fund managers running one-shot VC funds on AngelList, and that also leads to bad incentives. So that hasn't really worked out the way it should have, but in a couple of years it might be very different.
Cool. Donatas, any insights from Lithuania? Because we have Deeper, who raised, I think, pretty good amount.
6,000, yes.
Yeah, in Kickstarter. What's the bike startup?
Ruby.
Ruby, yeah. Ruby, I think they did very well also on Kickstarter.
And we have a watch.
Oh, yes.
$1 million, right? So that's amazing. So it's a very small number of cases, right? What we have here locally, and I wouldn't say that. Anyway, Deeper, they got 60,000, but they raised venture money afterwards, right? Ruby, they're still looking for money, and these guys we watch, of course, with $1 million. Now they have a headache how to deliver these watches. But this is exactly the reward platforms. What Vincent mentioned. You know, probably I don't know any success stories of Lithuanian companies raising money into equity. So not much to comment from my side on this. I don't feel any competition from these guys so far.
Good to hear that. Right, so coming back to tips for startup founders, we have to, if you would have to give just one tip, your one best tip to a startup founder, what would that be? And we don't have that much time, so maybe Daniel.
I think, and a little bit based on the audience here too, there were some who already was on the journey and some who were maybe thinking about it. You know, the idea is and you probably hear it from everyone, it's totally right. So it's all about doing. So just do it. I think that's the major thing. We learn so much when you actually throw yourselves into it and start building and the lessons from that. So don't hesitate, do it. That would be my main tip.
Donatas, I can see you already have a...
Yeah, I have a microphone. So my only thing is just focus. Focus on what you do and don't run around. Don't change your idea every 2 days or whatever. And just focus on what you're doing and keep going.
We learned that the hard way with drag deck. And Vincent?
Yeah, I think for us, one thing we're always trying to figure out is what are they optimizing for? Why are they doing it? Especially at that early stage. So that's the thing we're trying to figure out. We see that quite often, that people pitch us very passionately, and then when we turn them down, they then come back and pitch us a different company. So yeah, there's lots of people starting startups because they're cool, or everyone's doing it these days, or they want to make money rather than they want to solve a problem. So I think figure out what are they optimizing for? Yeah, why are you doing this?
And I think to add to that, I think it's also very important to talk about the idea. I mean, not be too secretive or have fears that someone is going to steal the idea. I mean, there's so many people having the same idea like you. At the end of the day, it comes down to just do it and to execution. But usually, if you talk to many people about the idea, you will get a lot of feedback. You'll get a lot of knowledge and just a perspective that you haven't thought about.
I think if you're looking to start a business and you have a great job or great something else that you're doing and you're nervous about doing it, I always remember my grandmother saying to me that regret is always more painful than failure. And so I think, go for it and see where it takes you, because if you do not do it, you'll spend a lot of years regretting it because somebody else will do it. Because ideas have now been, I guess, if you like, democratized, because you can have a startup coming from anywhere that can dominate your market. So if you're in the US, or if you're in China, or if you're in Lithuania, you can start an idea that can spread quite quickly around the world. So go and do it.
All right. Talin, actually, to make it more specific, a question for you. Previously delivered a speech about women in tech. So what about women founders who, if I remember correctly, get funding 60% less than men founders?
6 times less.
So what can we advise women founders to stand out more?
Okay, so first of all, in general, I think choosing the right partners is very, very important. People who can help you in the execution, who are share your vision, and who can help you make it happen. And I think the second thing I'd like to say, and specifically for female founders, is take big risks and don't be afraid to fail, because failure is part of the process. And what we see, I see at Tel Aviv Capital, is that a lot of, we find that fewer females go into this field also because they're socially constructed to take less risks and step out of their comfort zone less. So really have a great vision, form an amazing team, find the right partners, and just make it happen.
All right. Well, with this good note, we're going to end a bit early and go and prepare ourselves for the presentation by Julian Assange, founder of WikiLeaks, in the main hall of Omnitel. Straight after which we're going to have the final startup battle pitches. The final 9 startups will pitch and the jury will judge, and we're going to have a few startups that are going to win money prizes and a trip to Pioneers Festival in Vienna and a bunch of other stuff. Thank you so much, guys. This was really a pleasure. Round of applause, everyone.